I think the first thing we should start off with is just some basics about the thinkorswim code that most of you have probably imported. If you're on TradingView, some of the options won't be available, but the essential bits of the code are replicated onto that trading platform. So the first thing we should do is we should start with how to set up our charts to look comparable to what I've got set up here. One of two important key combinations to know in thinkorswim is Control S. That'll bring up your chart settings. We're going to use that in just a second. The other important key combination is Control E, and that'll bring up your Edit Studies window. That's where you're going to add and manipulate any of the indicators, including the custom indicators for thinkorswim that you probably already imported. So the first thing we're going to do is we're going to select any chart, and we're going to hit Control S. From the general chart settings, the first thing we want to do is uncheck Highlight Studies on Hover. I found that to be a little distracting. When you mouse over it, it'll make your indicators pop a little bit, which is kind of cool at first, but then gets quickly quite annoying. Next tab over at the top, we're going to go to Price Axis, and normally it'll be set to auto. It's set to manual right now just because I had been scaling the chart before. But the two things we want to make sure are unchecked are Fit Alerts and Fit Studies. And actually, I'm sorry, let's do a third one, Fit Study Markers as well. That way it's going to scale the chart to only the price action, not necessarily these big deviation bands that may be far off in outer space. Next thing to do will be to go to Time Axis and add some expansion area, which will give you these extra blank bars to the right side of the chart. I found that keeping it 10, 20, 50 bars, depending on your time frame. So this would be a 1 minute chart, and therefore 10 bars is 10 additional minutes worth of space. It's always very helpful to have a little extra room. I probably wouldn't go more than 50, to be honest. I think that'll make it just cloudy and take up too much space, especially if you're on a longer time frame chart. For favorite time frames, my two favorite time frames are the 5-day 1 minute and the 20-day 5 minute. You don't absolutely have to mimic these, but these are the two that seem to be the most helpful for me. A 5-day 1 minute view because it gives me a lot of detail and granularity, but also shows me multiple days of context. I'm rarely ever looking at a 1-day 1 minute chart, meaning 2 total days, or a today 1 minute chart, meaning only today's price action. I almost always want context. When I'm looking at a more swing variety, I'll probably be looking at a 20-day 5 minute chart to give me more perspective and slightly less granularity. I feel like it's a good middle ground in between something maybe at like a 90-day 30 minute or an hourly at an even higher width of chart. So again, 5-day 1 minute and 20-day 5 minute. And that can be achieved by clicking Add Time Frame and then choosing the settings appropriately for intraday charts. The next thing we're going to do is go to the Appearance tab, and you may have to spill down this little common area in the bottom half. But what we want to make sure is that the background is set to something neutral and pretty blank. So for me, I chose a jet black, obsidian black background. And the next most important thing is to uncheck grid. We do not want the price grid. What I found is this is so visually annoying. So I'm going to click Apply just so you guys can see it. It takes up so much of your visual resources, if you will, just to observe all the different price levels. Now it is somewhat helpful. It gives you a literal grid against which you can structure both price or time moves, but I got to tell you, it's more trouble than it's worth. I like the blankness of a chart against which I can judge when we interact with a VWAP or deviation bands. It makes it abundantly clear when something is worth paying attention to versus I'm just dazzled and distracted. The next tab over is going to be the Equities tab. We're going to uncheck Show Extended Hours Trading Session. It's also important that we highlight or click on this little arrow to the side, which will display this setting on the Style menu. That's going to give us a quick access option for how we want to turn on or off pre-market trading. So I turn it off by default by unchecking it. And then I make sure to select that little box so that we have an option in this Style menu. And we can quickly turn it on or off rather than having to go back to chart settings every time. Let's start with the intraday VWAP indicator. This is something you guys are all, I'm certain, somewhat familiar with in the sense that you've seen it before. It's probably what drew you to this style of charting. That's what we've got displayed on our current price action area at all. We've got our center volume weighted average price level, and then 1 and 2 deviations outward in either direction. So we've got a -1 and a -2 deviation band below it. The custom intraday VWAP that I've given you guys has some additional colorization options that make it a lot easier to detect kind of what direction the market is headed, and in some cases, the strength or the intensity. So what's different about my intraday VWAP indicator is that we've both colorized the VWAP line itself based on the slope, meaning downslope is this kind of raw pink color. Upslope is a bright gold. I've done that so that we don't get over kind of loaded with red and green after we've seen so much of that based on price action candles. But I did go with the red-green color style for this colorized cloud, the space between the VWAP and price action. So that makes it very easy to tell when we are above versus below volume weighted average price. They seem like pretty simple things, but they actually, in a kind of subtle way, get you thinking about the right direction of the market, even subconsciously. Now, there are periods of time where we're going to oscillate or cross on both sides of the VWAP, and therefore it wouldn't be so easy to just say, well, we're above the VWAP, I'm going to go long, or we're going to be below the VWAP, and therefore I'm going to go short. An example would be right back here, a very sideways, choppy point in time, right? So we're not only going to rely on whether we're above or below the VWAP, that red-green colorization, we're also going to be talking about the slope of VWAP, the intensity and direction of VWAP, to help us gauge whether the market is actually trending and moving, or if it's choppy and stuck relatively sideways. Let's take a look at one or two of the options within the intraday study. You'll notice that the VWAP color, it defaults to slope basic. Slope basic is what I tend to use because it's just upsloping or downsloping. Slope signal is something I was experimenting with to apply either a directional down or a directional up, or white for kind of neutral or relatively unsloping. I got to be honest, I think that makes it a little too complex, so I'm going to stick with slope basic for now. Again, I think it's pretty obvious to tell when a market is upsloping or downsloping, but it helps to have that overarching reminder. The thing that I use quite frequently, though, is the background color signal. It defaults to cloud, which is the green-red option we were just discussing. But by choosing fast lane, which is an option or a concept we haven't yet discussed, but fast lane will highlight the areas on the chart where we are beyond 1 deviation or -1 deviation on the chart. So what I'm going to do here is I'm going to change this. Actually, it's already set to fast lane. Now I click apply. And you'll see that only areas outside of 1 deviation band receive that additional colorization. So that might make it a little easier for traders who are looking for something with a strong directional move versus something that receives no highlighting, going relatively sideways. Oops, pick my drawing tool again, sorry. Relatively sideways or relatively sideways. What's neat about this is that it's all relatively automatic and you just have to change the settings. You don't have to calibrate it or adjust it. If you like both the red-green color signal and the fast lane behavior, I've got an option for both, which I think is really helpful, although a little distracting when we're first looking at this. So why don't we do this? For now, we're going to go back to the default, which is cloud, just showing above or below VWAP. But please know that you can go in there and change it to either fast lane or both, depending on your preference. And we'll talk more about what a fast lane is and what that means in a couple minutes. Something Jeff tends to use quite a bit is this setting for tolerance bands. These are a deviation sub-distance away from the deviation bands that'll create almost like small micro lines showing a tolerance zone around the 1 or -1 deviation band. During a strong trend, we may not always touch exactly on the deviation band, Actually, there are two good examples here and here, where we don't quite come to touch the dashed line itself, but by setting a small range of tolerance around it, it reminds us that these are squishy zones of support and resistance rather than a perfect single individual line. So right now, let's talk about the dashboard quickly. The dashboard is kind of, as the name implies, a quick way for traders to have at their disposal calculations that would otherwise take a little bit of time for them to do manually. This first block of code, which actually shows the amount of distance, the current location of VWAP and the amount of distance that price is away from the VWAP. So you'll notice here that it says VWAP and the current VWAP price. The next 3 bits of code are all distance measurements. We're showing dollar distance, percentage distance, and standard deviation distance between price and VWAP. So notice that these 3, they're pink right now or light red because we are below VWAP, but these 3 red blocks of text are showing us the same thing expressed in 3 different ways. Notice that it's not hard math to calculate, let's say, a dollar distance, but to figure out a quick percentage distance or to actually measure with your eyes the exact standard deviation distance might take a little bit of time. So again, I just thought it'd be convenient to have that all displayed and live in real time. It does not follow your cursor, so if you move your cursor around, these numbers won't change. It's only going to be relaying what's going on live based on the last traded price. The next block of code here expresses the standard deviation size, the spread between the VWAP and the 1 deviation band. I shouldn't have drawn that backwards on the chart. I should have drawn it right at the hard right edge because it is a live value. But it's measuring the distance between VWAP and 1 deviation. And you might say, Zach, if I know that that's 1 standard deviation, why do I need to calculate it in dollars and percentage? It's useful when gauging the amount of either dollar distance on the chart you're stand to make, or the percentage gain you are targeting for a successful trade. Hypothetically here, and I'm going to draw this in a different color, but hypothetically, if we were coming down to the VWAP and then beginning to rally, let's say we had entered long at or near the volume weighted average price. It would be helpful for us to know the amount of distance between our approximate entry and our likely first target. So that calculates it in both, like I said, dollar distance and percentage distance. This is also really useful when you're comparing, for example, 2 stocks to gauge which has more potential volatility. If you're trying to trade, let's say, Apple and Microsoft, one of them probably represents more chart movement and therefore more potential were it to move 1 standard deviation. We haven't talked yet about what standard deviations are more than what we kind of covered briefly in the roadmap, but a standard deviation is a unique unit of measurement that's individual to each stock. And therefore, it's going to represent the amount of likely fluctuation or movement away from the average, from the volume weighted average price in this case. Moving on to the next bit of code, the recommended share sizing. You'll notice here that it auto calculates for us a number of shares for a specific dollar target based on a certain standard deviation move. Now, these things are user changeable. So if we were to go into our edit studies, I'm going to hit Control E, and then we're going to either double click on dashboard. We can go in and change our typical dollar gain from 100 to anything else we wanted, and our typical deviation target. So if you tend to hold a trade for more than 1 deviation, and maybe you're trying to make $150, what's easy about this is it just requires you to go in and change the settings appropriately. And again, because I did a 1-to-1 adjustment on that, that'll remain roughly constant. So let's change it to maybe $250 on a half deviation move. So let's say we're big ballers, we're trying to make a lot more money. You can see here that it recommends a significantly greater number of shares in order to achieve that dollar target on that size of a move. And the way this works, obviously, is we're just pulling the dollar value that we have here, and we're saying in order for the user to make $250 on a half a standard deviation, and we know that that is about that amount of money, how many shares would they need to trade? So again, the dashboard is just designed to be a quick reference point for traders to make sense of the market without having to do the manual calculation themselves. One neat thing within dashboard, you can turn off any of these blocks of code. So if you decided you didn't want the VWAP distance, for example, that's perfectly fine. Go ahead and change VWAP distance to show no, and then click OK. The next, and I should say final study that we're going to briefly talk about now is down here at the bottom of the charts. It's what I call the VWAP aspect. Now it's called aspect rather than the slope indicator because it shows more than just the current slope of volume weighted average price. That's the setting that it is defaulted to, but there are two other settings within this study. Right up here at the top, if you go to aspect, you'll see that it defaults to slope, but there's also position and dev width. Slope is the default for a reason, and it is what we are predominantly going to be watching. So I would not recommend you guys necessarily need to explore position or deviation width, but just to tell you what they are. Position just redisplays every bit of price movement as an indicator at the bottom of your charts. That's useful for people who have a bunch of stuff on their charts already and just want to make sure that they've still got access to the VWAP in some form or another. Dev width does a statistical short-term comparison of the average deviation width or size and compares the current width of a deviation band for kind of a current versus historical volatility comparison. Maybe we'll get to that in the Q&A a little bit, but it's another confirming tool that I use to judge when the market is really breaking out or likely to be more volatile than it typically is. So by default, we're going to keep it set to slope. And what this histogram down here at the bottom of the charts represents, as you might imagine, is the intensity of VWAP's movement at any given point in time. So during a day where we have a really aggressive downtrend, you can imagine the indicator is going bananas down here at the bottom of the chart. If you compare that to a very sideways day where the slope of volume weighted average price is almost null, look at how the indicator is appropriately kind of asleep. There's nothing going on down here. There's no colorization for the most part. There's a little blip of green slope there, but nothing compared to like what we see on a strong trend day. So the important things to know about this indicator, it is a moment-to-moment measurement of the slope or intensity of VWAP. So it's going to change rather rapidly. One thing that tends to confuse traders at first is that there's a bunch of different colors going on. So the important thing to remember is that if the slope is trapped within the gray kind of boring zone, as I call it, between 2 and -2, which does not, by the way, have anything to do with the standard deviation bands. That just happens to be 2 and -2, but not at all related to the deviation bands. If it's trapped within this boring range, that effectively means there is no or very little slope. You can see that it only receives neutral colors like black or white if it's within that range. If it gets above that range, obviously, then we've got some upslope. If it gets below that range, downslope. And of course, we've got green and red color coding just to make it ever more directionally obvious. You'll see here at the very tips, it starts to, I would call it red line, like an engine redlining, but it actually just sort of maxes out. I've done that for two reasons. One, it's for a scaling reason, just visually with the indicator. It makes it a lot easier to be able to see things in context if the indicator is not exploding in one direction or another. It's kind of capped or limited. And also, like you may observe, there are going to be periods of time where the VWAP slopes really aggressively to the downside. You can see that momentary brief drop. That's only momentary and likely to sort of get back into a normal sloping range rather quickly. So rather than spend a lot of our time at the extremes, I figured it makes sense to just tell traders, hey, you're at a relative strength extreme for the way the VWAP is going to be moving. Now, I think a lot of traders want to measure the magnitude of this indicator. They say, well, I'm going to wait until we're way up here or way down here in order to trade. It's not quite what I would say is the best approach. Because this is a momentary indicator, you may get a strong moment of slope that then spends an hour waning in its intensity. Even as the market's going lower, the slope is kind of leveling out or de-intensifying. It's waning. The best way to use this indicator is as a confirmation tool for, are we seeing substantive slope enough, and is it consistent enough? That's really the key. Do we see slope for a long amount of time, or is it relatively spotty? Do you see here how there are only little brief bursts of slope, but nothing that really sustains itself over time? The difference between a strongly trending market and a kind of half-assed, mostly sideways market is slope. Now, obviously, price action is going to create slope on the volume-weighted average price. It is an average, and therefore it's going to follow what the market is doing. So if the market is dropping, it will drop appropriately. But they kind of work in conjunction. In a downtrending market that is pulling its average lower, it's almost like a self-fulfilling prophecy or a self-reinforcing cycle. The more you do this sort of thing, the more likely you are to keep experiencing that kind of thing. So for example, the more selling pressure that occurs during the first part of a day, you might get some sort of a snapback or reversion to the mean. But overwhelmingly, people have kind of acknowledged this is a day full of sellers, and sellers are likely in control until they are not. One other option here, and I guess I should mention this in case the color coding is a little distracting to people with the different segments. You'll notice here that slope style can be changed from segment to gradient. So it defaults to segment, which is what you see here. If we change it to gradient, it just makes for a green, red, straightforward approach. Actually, while we're here, I'm going to show you guys one more element of aspect. There is a setting for sensitivity, and by default, it's calibrated for large cap securities. But there are other options in here, like small cap, ETF or index. So if you're looking at SPY, IWM, the Qs, something like that, diamonds. I know we've got some futures traders in here as well. So there's a setting for futures. And finally, custom. So this is just a custom magnitude setting to either make the slope appear stronger or weaker, depending on what is appropriate for your chart. I definitely recommend sticking to large cap stocks. That is certainly what I would recommend, at least when you're starting out, if not as your sort of basis for trading.